Howdy, my friend, welcome to Squirrel on Charts, your resource for advanced trading education. Let's talk about a major mistake most trend traders make. A mistake that results in many unnecessary losses. Let's start with a quick recap. First, a trend always consists of a move in the trend direction, followed by a pullback. A bullish trend always makes higher highs and higher lows, as shown by the left-hand picture. A bearish trend is the opposite. A bearish trend makes lower lows and lower highs, as shown by the picture on the right. When trading the trend, you usually keep the stop loss below or above the last pullback's extreme, depending on whether you trade a bullish or bearish trend. Now that we've looked at the basics of trend trading, let's now look at the two most common problems traders face when trading the trend. Problem number 1 is that the trend ends shortly after the entry. Oftentimes, the market won't make a new high or low after the entry. Therefore, you don't have the chance to move your stop loss to the last pullback to limit the risk. The picture below shows a situation you have probably experienced quite a few times in the past. After the entry, the market quickly turned around and broke the trend, while at the same time stopping you out. But there is a second problem that is even more frustrating. Problem number 2 is that the trend gets broken shortly after your entry. But after you got stopped out, the market continued going in your direction. The picture below shows exactly that situation. As a trend trader, you have probably experienced this quite often as well. Alright, now that we have talked about the two most common problems when trend trading, let's now talk about that one problem that causes all of that. Let me say it clearly, there is not just one trend on the chart. The major problem most trend traders face is that they have a lack of understanding about different trend sizes and about trends inside trends. Let's look at the two pictures below. On the left-hand side, we can see a good-looking bullish trend. It might be tempting for you as a trend trader to trade this one. But let's just go to a slightly higher time frame, or instead, you could just zoom out a bit further. As you can see, there is another trend. And the good-looking bullish trend we see on the left is just the pullback of that bigger trend. If you trade the bullish trend, you cannot expect that the market will continue the trend for a long time. The chances are higher that the bearish trend continues, or at least tries to make a new low. And this brings me to the main concept of this video. There are always multiple trends at the same time on the same chart. You will always have trends inside another trend. Of course, this makes trading the trend slightly more complicated. But neglecting the other trend sizes, especially the ones on a higher time frame, will limit the chance of you picking a good trend to trade. Here is another example of trends inside trends. This is not a concept that occurs every now and then. It's always present, and you will at any time find trends that are inside other trends. Sometimes, you don't even have to zoom out or choose another time frame in order to see multiple trend sizes. So, let's take a step back and think about the two major problems trend traders often have. Problem number 1 was that the trend ends shortly after the entry. This is common when the trend that the trader is currently trading is just a pullback of a bigger trend that goes in the opposite direction. Problem number 2 was that the trend trader gets stopped out, but the trade continues afterwards. This is often the result when both the current trend size as well as the one above go in the same direction. When the higher trend size pulls back, the smaller trend might get broken. But since the bigger trend goes in the same direction as your trend size, the market will usually continue after pulling back and stopping you out. Because remember, the bigger trend didn't get broken. Just your trend size got broken because of the bigger trend size's pullback. So what does this all mean for your trading? It's obvious that you cannot pay attention to all trend sizes. If you are trading fairly short term, it makes no sense to also look at trends that have been going on for years. The best thing you can do when trading the trend is to always pay attention to the trend size that is one above the trend size that you want to trade. Make sure that the trend size above is not going against you. This alone will limit the number of bad trades you take. If the bigger trend size is going in the same direction as the one you want to trade, keep in mind that this trend size also has to pull back at some point. So if the bigger trend size hasn't pulled back in quite a while, the chance of seeing a deep pullback increases. Alright, I hope this video was helpful. If you are interested in more advanced trading education, make sure to subscribe. Good luck on your journey. Bye.